Welcome back to the Versus series, where today we will be crowning the best dividend broadcasting stock in the US stock market. So broadcasting is a sub-industry within the media industry, within the communication services sector. If this type of content is for you, be sure to like the video and subscribe to the channel for new content every Monday and Friday. Now let's get to the content. In an effort to keep these videos as quick as possible, I'm going to put the episode criteria on the screen right here. Feel free to pause the video if you want to know what these stocks are going to be judged by. Jumping right into the comparison, so the best two broadcasting dividend stocks we have are Next Star Media Group, stock ticker NXST, and Paramount Global, stock ticker PARA. They are both in the broadcasting sub-industry within the media industry that is a part of the communication services sector, as I mentioned earlier. Now we're going to shuffle them up and we're going to see which one comes out on top. So the first thing we're going to be taking a look at is the market cap. So you guys can see right here that the market cap of company A is $6.98 billion, while the market cap of company B is $20.05 billion. And here you guys can see the visual representation of that. There are no points rewarded for market cap. It's just easier to see how big one company is versus the other. Next category we're going to be diving into is growth. So you guys can see here that company A has a revenue year-over-year growth of 4.89%, while company B has a revenue year-over-year growth of 8.79%, giving the point to company B. And we have a revenue 3-year CAGR of 19.53% for company A, and a revenue 3-year CAGR of negative 2.33% for company B, giving the point to company A. So after the growth section, the score is knotted up at 1 apiece. The next category we're going to be taking a look at is profitability. You guys can see right here that the gross profit margin of company A is 60.47%, while the gross profit margin for company B is 36.23%. The point goes to the highest gross profit margin, which is company A, which brings your total score of 2 points for company A, 1 point for company B. The next category that we're going to be taking a look at is the momentum. And what we do for this is the percentage off of the 52-week high. So you guys can see here that company A had a 52-week high of $192.84, a current price of $167.85, which means they are 13% off of their all-time high. And then with company B, they have a 52-week high of $47.46 with a current price of $28.42, which means they are 40% off of their all-time high. Since that is the bigger discount, company B gets the point here, bringing the score back to even at 2 points apiece. And the reason we're all here, the dividends. This is the last category we have. You guys can see here that company A has a forward dividend yield of 2.1%, company B 3.29%, so that's a point for company B. Company A has a forward annual payout of $3.60 per share per year, while company B has a forward annual payout of 96 cents per share per year, so that's a point to company A. Company A has a payout ratio of 14.57%, with company B having 37.07% payout ratio. The lower payout ratio wins. Company A gets the point. A 1-year dividend growth rate of 25% for company A, and a 1-year dividend growth rate of 0% for company B. That is a point for company A. We have a 5-year dividend growth rate of 23.87% for company A, and a 5-year dividend growth rate for company B of 6.83%. So that is another point for company A. And then the 10-year dividend growth rate, company A did not qualify, but company B did, and they have a 9.15% 10-year dividend growth rate. So that's a point for company B. While this one was really close compared to the other versus battles, the winner of this episode is company A with a score of 6-4. And the moment you guys have all been waiting for, company A is Next Star Media Group, stock ticker NXST. So a little disclaimer here, this is all of course based on the metrics I used and the time I did my research, which was 11:46 a.m. on the 10th of June 2022. But with that being said, NXST was deemed to be the best dividend stock in the broadcasting sub-industry within the media industry within communication services sector. So if you happen to do a detailed breakdown this granular and you need a stock in the broadcasting sub-industry within the media industry within the communication services sector, this might be a good place to start your research. Keep in mind that there are 2 more matchups within the media industry on communication services, and that is cable and satellite and publishing. So those two are going to battle it out to see who the best of those is, and then we're going to move them on to the next level of the brackets. Well, that's going to wrap it up for today's video. Please be sure to smash that like button if you guys enjoyed today's content, and don't forget to subscribe for new dividend-related content every Monday and Friday. If you own either of these two stocks, feel free to comment down below and let me know which one you own and why you own it. Or if you disagree or agree with the research that was completed, let me know in the comments down below. But until next time, see you.